No. So, warm welcome to our third session in risk management. Here you will see the chart or the slides for today. And then we are also going to discuss some Q&As and also some case studies. I think I should switch to the presentation mode so that you have a full screen. And then please ask question whenever you have some, and that we start also some discussion on today's topic, which is about sector regulators. It's still a bit a dry topic because it's more or less a bit theoretical. It requires that you learn some facts and some figures by heart. That's not avoidable under topic 3. So, sector regulation. Yeah, here we will go into the sector regulation, and we will look into the European community. We will look also into UK as well as Malaysia. Whereas we will keep the European Union and UK a bit shorter, all just what is really relevant, of course, for Malaysia. Yeah. So, European Union, it's a supranational political and economic union. It was already formed in the 1950s, 1957, and meanwhile has 27 members. And UK was also a member, but they decided for the Brexit some years ago. When you think about this market in terms of size is covering 5.8% of the world's population with roughly 450 million people, and is generating a gross domestic product of 16.6 trillion US dollar, and that represents approximately 1/6 of the global GDP. Yeah, so it's the third biggest global economy after the United States and China. Yeah, just that you have here some ideas about the size. You see here the timeline how the European Union evolved. It started in 1957. Just some countries, core countries of Europe, they came together and formed a first economic union, which was particularly dedicated to steel trading. And later on, it was continuously expanded. And you see, for example, the main expansion took place in 2004 with a lot of Eastern European countries joining here the European Union. Yeah, and unfortunately, in 2020, United Kingdom leaves the European Union, so that is right now just 27 countries. That's still pretty much a lot. Yeah. So, how is the European Union organized? Yeah, the organization is quite complex. We have here different bodies regulating here also the risk management for the EU member states. And foremost, of course, we have the European Parliament, which is headed by the President. Yeah, and then, of course, we have also a European Commission. Yeah, and the European Commission itself is also headed by a separate president, and the European Commission is issuing the European legislation with their directives. Yeah, and then we have the European Council. And the European Council is here also linked to the European Court of Justice. And in the council, there are the national governments are represented. And foremost, the European Council is composed of the head of the governments, of the national governments. Yeah? For example, the Prime Minister of Germany, of France, of Italy, and so on. Yeah, that's here a good overview. You see, the European regulator, European Union, is also split into three three branches. We have here the legislative branch, yeah? We have the executive branch, and we have also the judicial branch. Yeah? That's here to separate the different powers. Yeah? One is giving the orders, the other is executing the orders and looking that the orders are fulfilled. And of course, in case of any disputes, then we have also a European court, which is ultimately the highest level of court in Europe. Yeah, that's here to give you an overview. So, which regulations? The regulations of EU, they came up here with risk management activities based on sectors. Yeah, so the risk itself, yeah, cross member states boundaries. So they had to agree on a common standards. That common standard that is what European level is about. Yeah, for example, where human rights of EU citizens are threatened, then of course here we have human rights treaties and the Court of Justice, which is here intervening accordingly. Yeah. Why are the European regulations are important for risk management? Yeah? And in which areas they exist? Yeah, they are important for the stability of the financial service sector. Yeah, they are also important here for the environmental protection. And the third pillar of the regulation in terms of risk management is dedicated to health and safety. Yeah. So therefore, you see health and safety of medicine, for example. Yeah? When you think about health and safety, also food safety comes up, and safety of health of the employees and consumers. Yeah, that's important. That here not only the employees are covered by this protection law, but also the consumers. So there is quite a very, very strong protection of consumer rights as well. Yeah? Then we have the environmental protection, yeah, which is that here, for example, the supervision of risk management practices in nuclear power stations and other environmental hazard activities are regulated. So when we look into the regulation of the EU itself, then each sector has then particular regulations, which we will see here later. The execution or the enforcement, yeah, of the risk regulation is executed by European directives. Yeah, so the European directives, they are here issued, yeah, drawn up by the representative and then finally agreed by the Council of Ministers, because each country, of course, has also to enforce this European law. Yeah, because of course, let me say the European law is finally on top of the law. Yeah, so of course, first of all, we have the local law, and the local law must embed here also European law, that it is really working. Yeah. And here we have the directive so far. Yeah, and of course, it's also regularly updated and developed further so that it works. And then, of course, one important regulator is also the European Central Bank. Yeah, the European Central Bank, you see here a picture, yeah, a huge building is regulating here the financial market in particular, and therefore has its own enforcement and own regulations. Here, for example, Basel III, now already working on Basel IV, is driving here the development in terms of stability further. That's here what is important to know. Why here? We can already dedicate some efforts to questions. Yeah, why is a single central bank required to regulate financial stability in the Eurozone? What are the key reasons? These key reasons are also applicable, let me say, why it is required to regulate the financial stability in Malaysia. Yeah, in Malaysia, we have Bank Negara. And what are the key reasons? Why do we have a central bank? Yeah, what is here the reason about? And you see here, we have listed at least 5 reasons which make sense. Yeah? That's for first and foremost the monetary policy cohesion. Yeah, that means the Bank Negara and as well as here the Central Bank of Europe is responsible about setting or about making decisions on interest rates, on money supply, on inflation targets. Yeah, they have here to coordinate here across the member states. Yeah, you can also think about Malaysia as a federal state. Yeah, with their different states like Johor, like Penang, yeah, like Kuala Lumpur, and so on. And therefore, here the Bank Negara is coordinating here consistency about the monetary policy. Then, of course, it's also important to have a central bank in order to have a financial stability oversight. This is a kind of lessons learned also from the financial crisis in 2008, 2009. Yeah? That means the central bank is the regulator for all commercial banks and investment banks. Yeah? And they have here the power to give orders and regulate here the market accordingly. Also, who can open or what is required to open a bank. Yeah, not everybody can open a bank and provide here banking services. Yeah, you must fulfill here tight requirements. Yeah, and these standards and are set here by Bank Negara and also by the Securities Commission in Malaysia to regulate here the financial markets to have stability. Then, of course, the central bank has also a duty in terms of crisis management. Yeah? Whenever there is an imbalance on financial markets and also imbalance in terms of currency, yeah? The currency exchange rates, yeah? Then, of course, here the central banks are allowed to intervene, yeah? So that here stability can be achieved quite fast after, let me say, some shaking developments. Yeah? And therefore, we saw yes, a lot of interventions during the financial crisis to keep really the markets stable. Yeah? You see here, yeah, even the currency stability is here issued or here mentioned as a separate point, yeah, because for some countries it's very, very important to have a strong currency in order, yeah, to facilitate here cross-border trade. Yeah, you know, it is important for countries to attract foreign investments, and on the other hand, to be here, competitive when it comes to exports. Yeah, and here usually currency pairs, yeah, such as US dollar against Malaysian ringgit, yeah, are often kept quite stable, yeah, or also let me say Malaysian ringgit with Thai baht and so on, yeah, with the main business partners Malaysia is dealing with. Yeah. Right now, in terms of US dollar, we see a weakening of the US dollar insofar as the government wants to devalue the US dollar in order that they can promote more exports. Yeah? So that it becomes more, that it becomes cheaper for other countries to buy US goods. Yeah. But on the other hand, yeah, you see that then right now the Malaysian ringgit is quite strong against the US dollar, and this, of course, might break a bit the dynamics for exports. Yeah, for example, the rubber glove industry. Yeah, they are exporting a lot of their products to overseas, and for overseas now, of course, the products become more expensive, especially for the United States. Then, of course, the central bank has another duty, and this is dedicated, to the development of fiscal policies, like taxation, public spending. Here the central bank is often the extended arm for the government. Whenever the government want to initiate public spending, or here set new taxation, then of course the central bank is executing this. So that therefore they work here closely together with the national governments in terms of fiscal policy. Which organization does the European Central Bank regulate? That's also, you can take it one-to-one for Malaysia as well. In Malaysia, we have a similar structure, of course, in terms of player in the financial market. And therefore, when it comes, which organization does Bank Negara regulate? Then you can here answer in that particular manner. There are the credit institutions. Credit institutions in terms of banks, commercial banks. They are offering here investments, they are offering payment services, they are offering lending, and therefore here the central bank is safeguarding the overall financial system. Then, of course, the European Central Bank is also here supervising the so-called SIFIs. These are systematically important financial institutions. They are critical for the working of, let me say, of the financial markets. For example, in Malaysia, of course, such a systematically important financial institution would be Maybank as the biggest commercial bank. Then, of course, that's a particular here dedicated to Europe, because each member state has also their own central bank. There is a central bank of Germany, there is a central bank of Austria, and they are also here reporting or subordinated to the European Central Bank. So therefore, it's the central authority for the monetary policy. Furthermore, the European Central Bank is also here responsible for maintaining the stability of the euro and facilitating cross-border trade, investments, and so on. This, of course, can be here transferred one-to-one also to Bank Negara. Bank Negara is maintaining the stability of the ringgit, common currency for whole of Malaysia, and of course facilitating cross-border trades, attracting investments and economic integration within the Eurozone. That's a specialty for the European Central Bank. Then, of course, the central bank also offers here a clearing and the settlement system, a standardized system where the commercial banks and the players of the financial markets are members, and they use this system. That's a highly automated system based on information technology. And here also they work, for example, on the digital money, and like here some digital currencies and so on, and they use here the so-called blockchain technology. Just to give you here also some further insights beyond here just the slide itself. Then we have a lot of other regulators in terms of risk management, and I think there is always a similar structure in other countries as well. Of course, we have an agency for safety, health, and health at work. If a country is engaged in atomic energy, then we have a separate regulator dealing here with the atomic energy. We have the aviation safety. Also in Malaysia, you have the aviation safety board, which is regulating the aviation in Malaysia. Yeah, we have a banking authority, a separate banking authority. We have a chemicals agency. Yeah? We have food safety, also insurance and occupational pension authority. Yeah? We have maritime and safety agency. We have medicines agency. Yeah? And we have here also an agency for the network and information security. Yeah, that's on European level. On Malaysian level, we have for sure similar bodies, just that they are named differently. Yeah. So the financial risk management regulation. Yeah. When you think about it's here the risk management regulation is often foremost dedicated to the financial services because that's very essential. And here, of course, it's about to achieve or keep the financial stability. And why is this necessary? Because usually there is a high level of information asymmetry between the financial services and their stakeholders. We as individuals, for example, that we want to place money with a bank and or lend or borrow some money. Then of course, we depend on the information given here by the commercial banks. It's not so easy to have here full transparency. And therefore, of course, the bigger the player, the more insight in the financial markets a player has, and therefore is an asymmetry to the ordinary, let me say, small SMEs or individuals. And here the regulation shall protect them and shall here help to avoid any misconduct. For example, when you think about the Securities Commission, they have the oversight of the transactions going on the stock exchange, whether there is not any insider trading ongoing, mis-selling ongoing, or market manipulation takes place, and also financial crime. In terms of financial crime, in Malaysia, we have this centralized anti-corruption committee, MAICS, I guess, and they are also here investigating, for example, in financial crime, together, of course, with the relevant branch of the Royal Malaysian Police, BDRM. And risk management regulation, when you think about what it is covering, then we have always here, in terms of the financial services aspects, three main areas. It's about the financial solvency of the financial institutions. That means every bank has to report and they have to maintain minimum equity requirements. And for example, they have here they need to have a core capital and reserves of minimum 8%. Otherwise, they are not allowed to work or to be part of the market. The second area is the financial market stability itself. And then, of course, the conduct of the financial institution, their employees and intermediaries. For example, if you want to work with a bank, you need to have a special expertise, and you have also to upskill yourself at regular intervals. That is all part of the conduct, and also the financial institution, which requirements they have to fulfill. That's here what's going on. And when you think on international level, the financial service risk management is here influenced by other supranational agencies or agreements, such as the Bank for International Settlement. That's the BIS bank, BIS. BIS is here regulating, for example, transactions between countries. How does it work? How the clearing takes place, and so on. And we have also the Financial Stability Board, FSB. and the banking authority, that's the European Banking Authority, and so on. When you think about the risk, which risks are in the financial services predominant, then you see here change of regulation as 91%. And then cyber risk quite high with 65%. We have also non-malicious system failures, 51%. We have reputation damage, 47%. And another is economic slowdown, stalling. Here also monitoring the recovery. That's 37% of the top 5. These are the top 5 risks which are faced in the financial service industry. And you see also outsourcing, political risk, internal fraud, financial misreporting, retention and acquisition of talents. These are some other important risks which have to be, which the financial regulators or the financial players are facing. That's so far from the European perspective. Let us now look into the British financial regulators, because they have even more influence to Malaysia, because in Great Britain they have here special authorities which are more or less in a way transferred after the independence as a colony from Great Britain in Malaysia. That they adapted it for Malaysian purposes. So which regulators do we have here? We have here the Prudential Regulatory Authority. This is the PRA. We have the Financial Conduct Authority, FCA. We have the Financial Ombudsman. We have then, of course, some other regulators, because in terms of financial market, for example, Guernsey, Jersey, Island of Man, they are independent, because they are like a regional spin-off, and therefore they have their own regulation when it comes to financial things. So what is the Prudential Regulatory Authority? That is part of the Financial Service Act 2012. Also in Malaysia, we have a Financial Service Act. And that is regulating here around 1,500 banks, building societies, insurers, credit unions, and larger investment firms. Here, this authority is part of the Bank of England. The Bank of England is the central bank of Great Britain, and has here 3 statutory objectives. You see here, to promote the financial safety and soundness of the firms it regulates. For insurers to secure appropriate degree of protection. Facilitating effective competition. You see here, you have also the link whenever you need some further information to this authority, then you can follow here the link accordingly. So what are their responsibilities? That is, they draft here the regulatory policy for the supervision. They come up with a rule book, which contains different provisions for different types of organizations. So that you have here a guideline which, for example, banks or insurers have to follow. And you see here much of the Prudential Regulatory Authority policies are influenced by EU directives. So just because UK did the Brexit, that doesn't mean that still there is a high interconnectedness between the regulation of Great Britain and European regulation. That's still quite strong. Then you see here what does this policy include? So the policy, that the rule book, the PRA rule book, that is related to the risk management, to the practice of the risk management, and therefore, here you see financial resources requirements related to capital buffers must be followed. The role of auditors and audit committees is regulated in this rule book. Responsibility, the roles and responsibility for risk management, board, senior manager, risk management function is regulated, outlined under this rule book. The management of specific types of risks, such as market, credit, and operational risk, is precisely regulated here in this rule book, and how to deal with that. And what is acceptable and where you should take action and so on. It's a kind of really good guideline also for companies when they want to implement here risk management in their respective organization. Risk control in general, risk reporting to external stakeholders. So therefore, this PRA rule book gives you a lot guidelines how you can effectively implement here a good risk management in your company. And it's also about that it goes beyond just that. It is also here intertwined with corporate governance structures. And you see here also that you have some regulations related to the company secretaries and governance professionals. You need not to know all the details in that overview, so that you know what is the prudential regulatory authority is already enough when it comes to a question in exam. Then we have the Financial Conduct Authority. That's also established here in 2013, and that is regulating 56,000 financial organizations and also non-financial organizations. And here it's about that also to ensure that the financial markets operate honestly and fairly. That's a vague terminology, but at least they have here a good approach. Also in terms, the main focus is, of course, also here to oversee the players, that they really play with in a fair way. Then we have here that the Financial Conduct Authority ensures here that there is a good understanding about the financial risks overall, and especially what might be potential negative consequences. And they also rule some 18,000 smaller financial organizations. This is related here to UK. In Malaysia, we have also a Financial Conduct Authority and an ombudsman, which is specifically here protecting the customer rights. So, and also the Financial Conduct Authority is here supporting other authorities when it comes to maintaining stability. And for example, the FCA looks also to protect customers from losses due to a financial instability or imbalance. So it's about consumer protection. It's about protecting the integrity of the financial markets from misconduct. You see here also the password is insider trading. Whenever you ask, what is the reason or the main objectives of the FCA, then consumer protection, avoiding insider trading, to keep it short. Promote also the competition in financial market. What does it mean, promoting competition? Whenever there is a merger ongoing, then of course the Financial Conduct Authority must approve that there shall not be a domination by just one player. There shall be at least a lot of players on the market, so that there is competition ongoing, so that it is ensured consumer get a fair deal. Yeah, only with a strong competition, prices for services are kept low. Otherwise, if you have a monopoly, then of course here the consumer would be slaughtered. Yeah, that is here to mention. Yeah. You see here the regulatory policy and supervisory activities covers many risk activities, yeah, roles and responsibilities. Yeah. You can always mention here when it comes to the description, all these authorities have similar similar approaches or similar core activities, yeah, to fulfill. Yeah, it's about the roles and responsibilities for risk management. Yeah, it's about the management of financial crime risks, yeah, money laundering. Yeah, although we have then the specific Anti-Money Laundering Act. Yeah, of course here the oversight is done by the FCA. Yeah. Compliance management. Yeah, it's also about to enforce here the regulations, the law, so that really the institutions, they are compliant with the requirements. Yeah? And when you think about, and that's a specialty which you find in Malaysia as well as in Great Britain, but not really in Europe. Yeah, that it is mandatory to purchase a professional indemnity insurance whenever you do business. Yeah, for example, if you work as an accountant with your own firm, then of course you have to take out a professional indemnity insurance policy. If you don't do this, then you are not compliant. In Europe, it's up to you because you are the one. Ultimately, you have to take the risk. Yeah, and of course, most of them, they do it on a voluntary basis. Yeah? Whistleblowing is also part here of this policy of the FCA. Yeah, and disclosing the risk with financial products and investments. Yeah, for example, they are also shaping here accounting regulations in terms of the international financial reporting and how financial products and investments have to be evaluated with impairment tests or fair value tests in the balance sheet. So that you have here also the connects to the financial, the accounting world. So what are the top 10 allegations? When you think about whistleblower system, and they of course monitor which things are reported. Then most cases are about compliance. Then it's about fitness and proprietary. Then it's about the culture and organization, treating customers fairly. System and controls. Consumer detriment, fraud, unauthorized business, data security, money laundering. These are the amounts of reports just on an average year. That is here just that you have some idea what they are doing and that they are dealing here a lot also with the whistleblower reports. The Financial Conduct Authority. Then we have the financial ombudsman. The financial ombudsman helps here to resolve the disputes between organizations and the customers. And here, of course, it's about that they want to avoid that the customers are unfairly treated. It has to do something, to put the powers in a right position. Often, of course, for example, when an error happens or a fraud happens, also with banks, that suddenly, due to whatsoever reason, you lose some money over your bank account, and it was not initiated by you because a fraud is behind there. Then, of course, the reimbursement is up to the bank, whether they accept the reasons and reimburse you the damage. And here you can go to the ombudsman and ask for help, because it shall be executed, yeah, this oversight and this help on eye level so far. Yeah. And then the judgment of the financial ombudsman is also overseeing here the mis-selling. Yeah? And here there is a kind of technical a product, yeah, which is the payment protection insurance. Yeah, just an example. Yeah, whenever you carry out the payment, yeah, and it is yeah, it is not justified, or yeah, then of course this payment protection insurance, yeah, will reimburse you accordingly. Yeah, but of course you have to fight through. It's not automatically. So therefore, you have here to refer to the ombudsman. Yeah. Also, the ombudsman, I give you here an overview what they are doing so far and how many complaints they receive. They receive here, let me say, yeah, millions of complaints. Yeah, and they also resolve the complaints accordingly. Yeah, you see at the beginning the complaints were quite high, about 500,000 within a year, and meanwhile, yeah, the players, they are used to the system, and therefore, yeah, therefore they the cases are going down. Yeah. So 84% of the complaints were settled. Yeah, they published also final decisions. Yeah, whenever these final decisions are very helpful in the argumentation. If you have a case, then you can refer to these decisions. If you have a similar case, and then you can find out what is finally the verdict. Yeah, you see, it's highly case law driven. Yeah, and you see here the public says that they trust that meanwhile there is a quite high trust, and you see the key financials. Yeah, they deal here with an operating income of 200 million pounds, expenditure even more than the operating income. Yeah. And ultimately, an average case costs about £1,000. Yeah, that's inclusively settlement and so on. Of course, the settlement, let me say, the payment for the settlement itself is separate. Yeah, that's just to deal with the cases. So dealing with one case is about £1,000. Yeah? And that, for example, for the customer, yeah, for the end consumer, it's free of charge. Yeah, that is ultimately here. Yeah, the financial institutions, they fund ultimately this ombudsman. Yeah. So what are the players in Malaysia? Yeah, I already mentioned Bank Negara Malaysia, the central bank. Yeah, they are playing here a significant role in the promoting of financial inclusion and consumer protection. Yeah. The second important is the Securities Commission. Yeah, the Securities Commission is the regulatory body here supervising the capital market, predominantly, of course, the stock market. It oversees various market participants. Yeah? Then we have the Insurance Commission of Malaysia, ICM. Yeah, that's here another one. And here, of course, we have to differentiate between the ordinary insurance commission and the Islamic insurance. They have their own commission. Yeah, so we have here the takaful, in the for the takaful industry. Yeah. Then we have the Lawan, you see here, Financial Service Authority. Yeah, that's here pretty much similar to the FCA. We have here the Labuan FCA. Yeah. And here also, they have here the regulatory authority. They are the regulatory authority responsible for the overseeing of the financial services. Then we have the Employees Provident Fund, the EPF. Yeah, that's here a significant institution when it comes to management of compulsory retirement savings for the private sector employees. Yeah? That's here also regarded as a financial regulator, because they have that much funds to administer, so that they play a pivotal role. They are very important here also for the financial markets in Malaysia. The Malaysian Ombudsman is called here, Ombudsman for Malaysian Services, this OFCs. You have here also the link accordingly. And formerly it was known as Financial Mediation Bureau. It already dates back to 2004. Starting in 2005. It's a company limited by guarantee. It's a non-profit organization, and it shall settle here dispute between different players. And it is licensed and approved by Bank Negara. That's here. And when you think about according to which law they carry out their settlements, the resolutions, then it is here according to the Financial Service Act 2013 and the Islamic Financial Service Act 2013. And that FOS, that's the Financial Ombudsman Scheme. How it is operated, that was launched in 2016. So that you have here also the clear picture about the financial ombudsman situation in Malaysia so far. Also, I tried here to come up with some overviews. What are the performance of this institution? They have roughly 6,500, 7,000 cases, inquiries, and complaints. And here you see 53% of the cases are related to banking, and 47% of the cases are usually about the insurance. And 72% could resolve by already in the case management stage, without involving here the court itself, and 28 is resolved at court stage so far. They of course analyze the disputes accordingly, and when you think about that they on average they close about 1,200 cases. On average they are amounting to 33 million. That were some figures from 2021 so far. And in terms of organization, the Financial Ombudsman has 216 members. The financial players, they become member of Financial Ombudsman, and they are funding here this organization so that the resolution of disputes can be carried out. That is, and about 70% of the cases are satisfied. And 66% of the OFS member had no disputes at all. So let me say 1/3 of the members are affected, let me say, by or by disputes. So far. Then we have here some other countries. That you have here also an overview. What are the financial sector regulators in other countries? Africa, Caribbean, Mauritius, Russian Federation, United Arabs. This I would say just dive through. Frankly spoken, for the exam, it's only relevant to a very, very small extent. Only if you have a case and in one of such countries you want to set up a subsidiary or whatsoever, then of course you should know about how it works in these countries. But usually, that's not so important. Yeah. But of course, for completeness, I have also here integrated here some information about the financial service regulators in other countries. Mostly it's about the central banks, yeah, central banks of Kenya. Central bank here, yeah, we have in the Caribbeans, we have a Barbados Financial Service Commission. Yeah? In Mauritius, we have the Bank of Mauritius Financial Service Commission. Yeah? Central Bank of Russia, United Arab Emirates Insurance Authority, yeah, and Securities and Commodity Authorities, and the Financial Service Authority, Dubai Financial Service, just to give you here some information. So, one other questions. Compare and contrast the objectives of BRA and FCA. Yeah, that might be quite a popular question, yeah, because here they can check whether you are aware about these two fundamental regulators and how they differentiate. This you can do in a table format. Yeah, you see, when it comes to BRA, then it is about promoting the financial safety and soundness for insurance, securing appropriate degree of protection of the policyholders, facilitated effective competition. FCA, consumer protection, protecting the integrity from and protect from any misconduct, and also promoting competition. Yeah, you see, PRR is primarily focused on prudential regulation, and FCA on conduct of business regulation. Yeah, that you have one additional sentence, how you can summarize or contrast here these two authorities so far. Yeah, the FCA is always focused on ensuring here consumer protection, yeah, against the misconduct. Yeah, that's here to mention. Then we have here a mini case, yeah, so that how can it come up in exam as a case study, yeah. Here it's about the mini case, and this mini case is here dedicated or discussing here the payment protection insurance, yeah, the PPI. That's a kind of known as credit protection insurance, yeah, or also loan repayment insurance. Yeah. Whenever you take out the loan, yeah, then you know that the bank is asking you to take out the insurance. Yeah. In case that you cannot pay, then the insurance will take over the payments, in case you die or whatsoever. Then, of course, here this payment protection insurance is helping here to repay the loan. Yeah, that's here one application. Yeah, it's a form of insurance. Can be sold as standalone policy, or usually it is sold as an add-on to a mortgage. Yeah, but here also I just give you one hint or one recommendation. Yeah, if you already give a mortgage loan, yeah, and therefore the bank can grab your flat or whatsoever, your real estate, yeah, because of the mortgage. Yeah, then to take out an insurance is like double insurance. Yeah, you give double security to the bank. Only give this if they give you more favorable interest rates in return. Otherwise, you should reject it, because it's like that you wear a belt, and then you have additionally a security network providing to the bank. Yeah, because you know the banks, they're always asking for a lot. They're asking always the maximum in order that they cannot lose at all. Yeah, so they don't even take a risk. But you have to pay interest rates where definitely a risk premium is included. So you have here really to negotiate. Yeah, just to give you here some practical advice. Yeah. Yeah, usually it depends, when, to which extent here the costs are covered or the claim, there can be here claim limits, or it is really covering here the full costs arising. Yeah.
Yeah,
Um,
we have a similar thing, MRTA lah. It's like mortgage reducing term loan. So it's like if you die, then there is the
mhm,
insurance to, in Malaysia.
exactly. Yeah. Yeah.
Yeah, yeah. In Malaysia, for housing loan, we do have this insurance that if you die or you get like TPD, it's like terminal or permanent damage,
Mhm.
permanent.
Exactly.
Uh,
Yeah. If you have an accident and you cannot work
yeah, yeah,
anymore,
yeah.
you lose your
Accident.
job, then
Yeah.
of
So
course
so
you
we do
don't
have.
have that income anymore. Then of course here the payment protection insurance, will bail you out in a way. Yeah. Mhm.
Yeah. So
In
this
this
one,
case, of
but this
course,
one,
it makes sense. Yeah.
yeah.
But just as as an additional security for the loan, yeah, it doesn't make sense. Yeah. For
Mm,
example, if you already give them a mortgage, yeah, then in case you cannot pay, yeah, then they can anyway grab your real estate. Yeah, because they
mm,
can say, yeah, you fail with installment payments. Yeah. Now we sent you some reminder you didn't act, and then of course they can grab here the real estate from you. Yeah.
mm,
Then they are already secured. Yeah.
mm,
Then why you should come up with an no, additional insurance? Yeah. Only if they in return reduce the interest rates, yeah, which you have to pay on the loan. Then it makes sense. Otherwise, it is just driving the costs of your loan upwards. Yeah.
yeah. Yeah.
Here you have to really to be careful, and especially if you have already a life insurance, for example. Yeah, then it's even triple. Yeah, then you have the life insurance. For example, you have an accident. Yeah, then of course the life insurance is already here paying. Yeah.
Mm,
And often, if they find out that there is double insurance, then they say the maximum reimbursement is this, and the insurers they share portion. Yeah, so you don't get the 200%; you only get 100%.
mm.
Therefore, you must here really be careful what's mentioned in the policy, and that's usually mentioned in very small small letters, not capital letters. You know it. I
Yeah.
think so. Yeah.
Yeah.
Yeah, you see here, financial institutions will have to pay here up to 36 billion in repaid premiums and compensation for mis-selling. Yeah, it's also like this that often financial institutions they try to sell you a lot of financial products. Yeah, which are not even necessary, and which is just that that they can get some commissions and so on. Yeah, and if it is found that that was a mis-selling, yeah? For example, they want to lure you into an acquisition of bonds, yeah, junk bonds, yeah,
Mm,
high risk bonds. Yeah, they say, wow, this is a good investment. If you now invest in this financial product, then you will get an annual return of 20%. Please do it now. And then they force you and convince you, and ultimately you face a loss. Yeah, then you can go here to the ombudsman and look for a regulation. And of course, here the BPI shall also protect you that you will be reimbursed in case you have faced a damage, a financial damage. Yeah, that's how it works here. Yeah.
mm,
Yeah. Then let us move on to the health and safety regulation. Yeah, health and safety regulation very important because it shall protect here stakeholders from death, injury, and ill health. Yeah, it's whether physical or mental health. Yeah, also here mental health is included. Yeah, Which stakeholders are protected? Of course, employees, customers, and of course also third parties. Yeah? If, for example, households they live near organization, and the organization creates some negative impact, such as noise, air, or ground pollution, and there is really a damage, then of course the health and safety regulations shall here protect these households, that in case there is a damage, that they also get some reimbursement of the damage. Why? Yeah, it exists because the market-based incentives. Usually the market, there must be a strong regulation, because if you just leave it without regulation, it would be insufficient. On voluntary basis, a company would not deal with health and safety. So therefore, the organization, they must force them. And it's here about also to avoid here the ineffectiveness, because here is also asymmetric information between the company and, for example, the employee, also between the different kinds of products. Here especially is to mention this public goods problem. A chemical industry or a pharmaceutical company is producing medicine, but that comes at the cost that, for example, the nearest river is polluted, and it is then damaging the households around. Then it's often tricky really to evidence who is the culprit, who really is the reason for this pollution. And often it cannot be really detected. If there are upstreams several companies, which company was it? And often it's like this, that the profits are taken by the companies, because they don't care about any, let me say, wastewater treatment or something like this. But the damage is to the general public, and the general public has to pay for these damages. And often, even if there is a health and safety regulation, there is a lot, let me say, misconduct ongoing. But when we think about what is the intention of the regulation in terms of risk management, it is here about to identify and assess the health and safety hazards. That's the first step. You need to know what can happen, what might be a danger. Then you have to take appropriate measures. You have to control these hazardous things which can happen. And the third step is, because we have this health and safety organization, to record health and safety incidents, so that the agency, the regulatory agency, can improve here the regulations. So it's finally about implementing appropriate policies and procedures. That's here what the health and safety regulation is about. What is hazards? Anything may cause physical or mental harm. You see here poisonous chemicals, electricity, working at height, working excessively long hours. That can also be hazardous. Because just imagine if an employee always have to work overtime, and then finally, let me say, he or she is finishing work at midnight and then driving home and has an accident while driving home. Then what is the reason for the accident? Of course, if you always work excessively long hours, then you are tired. So therefore, limitation of working hours per day. That's also part of health and safety regulation. But it is intertwined, of course, with the labor law itself as well. And usually when it comes to also open drawer, utilization of machinery, and so on. Yeah, therefore, you have always to come up with guideline how to operate this and that machinery, which safety action you have to take. Yeah. And when it comes to the management of the health and safety regulation, often it's done via government-appointed agency. Yeah, so therefore the government has here a strong interest that the regulations are working. Yeah. So therefore that they are empowered. Yeah, they are empowered here to implement new rules. Yeah, they are empowered here to supervise. Yeah, they are empowered also to take enforcement action. Yeah? If there is any non-compliance, that they can really fine them. Yeah? If this authority would not be appointed by the government with the empowerment, then they cannot give any fines and collect them. Yeah, and the fines is not just fines in terms of some payments. It can also go beyond that. Also end up in imprisonment if it is repetitive. Yeah? So, which agencies do we have? Let us first look into the British Islands. The UK, they have the Health and Safety Executive, HSE, that's the abbreviation for them, for the UK. And then the Protectorate, these independent organization or areas like Guernsey, like Jersey, and Island of Man, they have their separate. Because that's historical. That is a historical development that we have here. These separate inspectorates. But for you, most important is the Health and Safety Executive, HSE, for the UK. So further details to this. It was here implemented with the Health and Safety at Work Act already 1974. You have here also the link for further details. If you want to, or if you need it, also when you work, maybe you have to look into some regulations. Then you can use this link. So they have the power to create regulation, to inspect here the practices, and to take enforcement actions such as fines. They can issue fines. Wherever it is necessary. They place here expectations on employees and employers. But here, very important, the prime responsibilities remains with the employer who is responsible that the employee is following the instructions in terms of health and safety. That's very, very here important. So therefore, often companies, they install here a separate, employee dealing with this health and safety issues. Some they even install here a management role for this health and safety issues. And employers are expected here to ensure that employees are protected from any hazardous materials or any danger as far as reasonable practical. That's a kind of terminology which is a bit vague, because what is reasonable practical? If it is not practical for a company that they even supervise each employee, so that you have a second employee just supervising, that one is keeping all the health and safety regulations, then this would not be practical. So it must be, when they point out, when they give, for example, protective clothes and so on, when they do some trainings, then this is here regarded as reasonable practical. And you see here, providing appropriate levels of protection, fire, slips, trips, falls, dangerous equipment, and so on. Excessive long working hours, you already mentioned. Undue workplace stress is also regarded as a health and safety issue. In return, of course, employees are expected to cooperate. So in case if the employer says, please put on your protective clothes, yeah, helmet or whatsoever, and the employee is not following, and the employer can evidence that he or she instructed the employee accordingly, then he or she, the employer is out of obligation. Yeah? But in all other cases, yeah, of course, here the employer must take care that these health and safety regulations are followed. Yeah? Also, non-employees, yeah, who might be at the place of work, yeah, contractors, suppliers, and so on, they are also here covered by that act. So it's a very comprehensive regulation here, yeah, covering a lot of stakeholders. Yeah? Yeah, you see here, usually it's also that they issue a particular guidance, yeah, guidance documents, a range of documents, yeah, just to illustrate, yeah, guidance. The guidance is usually industry based, yeah. So, for example, dealing with asbestos, workplace stress, working at height, completing risk assessment, yeah, these are topics you should be familiar with. Yeah, that's really that you need to learn by heart. Usually, when you are able to list at least five, then it's fine. Yeah, you need not to list all of them, just that you have an idea. Yeah, when it comes to industry specific guides, yeah, nuclear power, yeah, very dangerous, fishing and farming, yeah, quarries, food, diving, tree work, cleaning, yeah, these are, yeah, use of chemicals, explosives, yeah, these are really here some areas where exposed to high risk, and therefore the health and safety executive is regulating here with separate guidance documents. Yeah? So which three pillars, yeah, are here enforcing the health and safety executive? Yeah, and that's also here applicable in a way, in a similar way it works also in Malaysia. Yeah, we have first, yeah, the COSH, yeah, COSHH, yeah, control of substances hazardous to health. Yeah, that is going is dated back to 2002. Yeah. Then we have the reporting of insurance in injuries, diseases, and dangerous occurrences regulation. That's the so-called RIDOR system. It was added in 2013. And finally, we have here the Employers' Liability Compulsory Insurance Act. Yeah, that's already dating back to 1969. Yeah, that's a year in UK. You have here also some icons. What is it about? But of course, we go here in further detail. Yeah. Let us look first into the COSH. Yeah. COSH applies to substances which are deemed to be hazardous, yeah, such as exit, fumes, dust, vapors, yeah, nanotechnology, germs. Yeah, that's here what is covered here by COSH. Yeah, asbestos, radiation, yeah, is dealt separately. Yeah, but many, or I would even say most or all of the organization are affected by the COSH regulations. Yeah. For example, yeah, cleaning company, yeah, if they deal here with cleaning products such as bleach, yeah, then it's also covered. Yeah. Or when it comes to dust, yeah, generated by agricultural processes, even baking, yeah, the baking dust is very dangerous. Yeah? Hairdressing, beauty, yeah, where you deal with chemical products such as peroxide, yeah, to dye the hairs, yeah, to color the hairs, for example. Yeah? That's really regulated for a lot of companies or areas or sector industries in meticulous detail. Yeah, that you should know here about. Then, what's the reader system about? Yeah, reader is the reporting system about, yeah, and apply to all organizations in the UK. Yeah, you have here to report any significant diseases, dangerous occurrences, injuries to the agency. Yeah. So, for example, if there is a death of any person on an organizational premises, work-related accidents, work-related accidents which leads to an incapacitation, non-fatal accidents, to non-workers, occupation-related disease, dangerous occurrences, gas-related incidents. Just to mention here a few. So whenever an accident happens at the company, then the company has to report about. That might be the covering here the full scope of this reader regulation. You have here a short icon. What must be reported? Deaths, serious injuries over 7 days, injuries, occupational diseases, dangerous occurrences, gas incidents. There is meanwhile already an IT-based reporting platform where you can then report this quite easily. Then, of course, when it comes to the reporting, the authority, the HSE, is allowed to do periodic inspections. So the HSE has inspectors. They can review here the management and safety practices in a company. They identify non-compliance. They issue here enforcement notices. Then they set the time period to achieve compliance if they are not compliant. And when you think about the frequency of the inspections, that's risk-based. The higher the risk in a company is, the more frequently it will be inspected. So then we have here the third pillar, which is the employer's liability. That was the first pillar when it comes to health and safety before even quotient reader was implemented. Because first they said, okay, we start with a compulsory insurance. Whenever the employer has to insure here their workers, in case something happens, then the claims are settled by the insurance, monetary claims, because let me say that the insurance cannot compensate in real cannot put it into place, into the former place. They can only compensate here with the financial consequences resulting from that occurrence. That's here what this insurance is about. So what are the key factors? You see here in UK, that's here an excerpt of the HSE in UK. 1.8 million work-related ill health cases, approximately in a year. 30.6 million working days lost. 0.6 million workers sustaining a non-fatal injury. 0.9 million related to stress, depression, anxiety. 0.1 COVID at that time, long-term COVID. Then 1 to 3 workers killed in work-related, so 123 in a year. Then you see here some other. The annual cost is about 11.2 million. When it comes to health, that was these were figures from 2020. Annual cost of related injury and new cases, 8.8 billion. 7.6 billion annual costs of such related cases. 12,000 lung disease, yeah, just to have here some key facts. Yeah, so it's very important to bring these figures down, because ultimately it's a high cost for the society overall. Yeah. So, which system do we operate in Malaysia? So, in Malaysia, we have the Department of Occupational Safety and Health. Yeah, that's the DOSH. Yeah. And you have here also the link, yeah, to the internet site, and the DOSH operates here under the Ministry, yeah, of Human Resources, and is responsible, yeah, for promoting and ensuring the safety, health, and welfare of employees. So it's mainly dedicated on the welfare, yeah, safety and health at the workplace. Yeah. Then they play a crucial role, of course, in the occupational safety and health regulation to prevent here workplace accidents, injuries, and occupational disease. That's the DOSH. Yeah, it's narrowed down. It's not so. It's not in general. Yeah, that any accident shall be prevented. It's here really dedicated what's going on at the workplace. Yeah. So how they do it? Yeah, they develop here and enforce regulations. Yeah, that's what the DOSH organization, so the department, is doing. They do inspections and audits. Yeah, also identify here potential hazards. They do investigations. Yeah, they train and educate the people. Yeah, and they have also an occupational health service, so to provide here health services and medical surveillance to the workers. Yeah, and industry outreach. Yeah, that's to implement here best practice in various industries. That's what here the key functions of DOSH is about. Yeah. So then finally, we come here to the environmental regulation. Yeah, environmental regulation, they are also here in particularly shall prevent here risk on the environmental level. Yeah, it's about pollution of air, water, or earth, resource shortages, excessive reduction of local water, destruction of natural habitats, excessive noise, generation of greenhouse gases such as carbon dioxide, and geological problems, subsidence and earthquakes. That's here what environmental regulation shall prevent. So that here more care is taken towards or for the environment. That we really have an attitude to protect our environment. And here we can mention this issue with the public goods. Pollution preventing is a public good. Usually if you don't have really tight regulation, air pollution act or something like this, or regulating here emission thresholds and so on. If they are not really very tight, then of course, the pollution happens and nobody is really responsible for it. So therefore, all the costs resulting from damaging the environment is ultimately covered by the general public. Therefore, public is a public good. And here, for example, when you think, and the pollution prevention cannot just regulate it on individual level, or on country level, or because it's widespread. It affects here large geographical area. So therefore, it makes it counts which emission which emission takes place, let me say, in South America, because also, let me say, in China, they are affected by that emissions and vice versa. And therefore, to handle here environmental problems, international agreements and treaties are trying to mitigate the effects. Yeah, and we have here, for example, the Kyoto Protocol. Yeah, but if you think about the Kyoto Protocol, yeah, it limits here the emissions. Yeah. And but the United States, they don't have accepted the protocol. They didn't implement it in their national law. Yeah. Other countries, they did. Yeah, there it is really mandatory to bring down the overall level of emissions of carbon dioxide. America doesn't care about. And if such a huge country is not caring about, yeah, then it's not the best. Yeah. So therefore, a lot has to be done here to improve here the environmental regulations. Yeah. In UK, yeah, and also let me say, yeah, that's pretty similar to the European Union. We have the Environment Agency. Yeah. For example, the Environment Agency in UK is regulating here a vast variety of areas. Yeah? UK waterways, chemicals, yeah? Meeting EU and international climate change agreement obligations, yeah? Promoting energy efficiency, yeah? Environmental permits. Yeah? For example, in the EU, you can only operate a company if you have an environmental permit as well, not just the operational permission. It must also be an environmental permission, and therefore they investigate. Yeah, well, what is the impact to the general environment from this or that company, and yeah, if it fulfills standards, yeah, then of course they can start operating. Otherwise, not. Yeah. Then managing and investigating incidents, managing fisheries, flooding, waste management, nuclear safety, oil storage and spills, yeah, and so on. Yeah, that you have here an idea. Yeah. And here, of course, the crown, the dependencies as Jersey, Guernsey, and the island of Man, they have their own department. Yeah, so this environmental agency is predominantly working, yeah, in the rest of the United Kingdom so far. Yeah. In Malaysia, yeah, in Malaysia we have also several government-linked institutions in a way, yeah, dealing here with the environment. Yeah, because of course, let me say there are really agency, yeah, responsible for the managing and protecting here the environment. Department of the Environment, yeah, part of the government. We have here a Ministry of Environment and Water. Yeah, previously it was the Ministry of Energy, Science, Technology, Environment and Climate Change. Yeah, now they just say Ministry of Environment and Water. Yeah. Department of Wildlife and National Parks, yeah, for Peninsula. Then we have a similar wildlife department just dealing with Sabah, Sarawak Forestry Corporation. Yeah, is another one dealing here with environmental issues. Department of Marine Parks, yeah, Department of Irrigation and Drainage, Forest Research Institute. Yeah, just that you have here an idea. Yeah, same. Yeah, in other countries, of course, different protection agency. Usually, we have a kind of national environmental enforcement or management agency or protection agency. Yeah, that can here be mentioned, and they of course come up here with regulations and policies and training and education, and yeah, partly of course also enforcement. But often with enforcement, it's not that strict. Yeah, yeah, that's so far that we went through the slides. Yeah. So now we have a lot of time. Yeah, one hour, still 1 hour left. That we really look into some Q and A's and questions, and case studies. Yeah.
Okay. Yeah.
That's here. Yeah, yeah, a good approach. I would say that let me say test yourself. That's more or less reflected in the book so far. Stop and think. That's a more holistic approach where you have some ideas. Yeah, what shall you do? Yeah, you see here a bit I already tried to implement here in our slides. Yeah, for example, when you say why is a single bank required? Yeah, then you have here the detailed answer. Yeah, uh, you see here. I try always to visualize that. Yeah, for example, why a single bank regulation is essential, and that's applicable in general. Unified monetary policy, prevent contagion, stop regulatory arbitrage, rapid crisis response. That you have here some bullet points. Then identify whether the organization that you work for or another that you are familiar with is regulated by the Securities Commission, Malaysia, Bank Negara, professional bodies like Malaysian Institute of Accountants, Malaysian that's the MAICSA, that's for company secretaries and administrators. Then internal audit Malaysia, Institute of Internal Audit Malaysia. Usually this made clear on the website and on any correspondence with external stakeholders such as customers. So first of all, you would need to identify your regulator, which regulator you want to discuss about. Then of course you look into their homepage, what is their responsibility, what is their vision, what is their purpose, that you can here mention what is here the sense of this. I did it here based on the chart. Just that we have here a summary. For example, you can say I take the regulator Bank Negara Malaysia Central Bank. What is regulates the monetary policy, financial stability, prudential supervision of the financial institutions. Which entities are regulated? Commercial banks, Islamic banks, insurance companies, takaful operators, development of financial institution, money changers. Then you have already here some ideas. And then you come up here with some sentences and describe it accordingly. For example, another regulator, Securities Commission, Malaysia. It's the capital markets regulator. It oversees the capital markets, securities tradings, investment management. So which entities are regulated? Stockbrokers, fund manager, unit trust, investment advisors, and so on. The players on the stock exchange, to sum it up. And so you have different professional regulators as well. When you think about the Malaysian Institute of Accountants, if you want to carry out the profession as an accountant, you must be registered with the Malaysian Institute of Accountants. They are regulating here this profession. You must be capable. You need to have the expertise, and then you can operate. Otherwise, you are a bogus accountant, for example. Just to give you here some other ideas. So then another question. Choose an organization within an industry sector that you are familiar with. Go to the HSE website, look at the guidance on offer, identify the relevant guidance topics and in industry sector guidance for your chosen organization. That's just that you have some ideas. And you see here, that the website is given. That's is related to the UK. But you have also the link in the slides to the regulations in Malaysia. And then you can here pick out, for example, an organization in the chemical industry. Then it's about which regulation must or which topics are regulated by health and safety. It's about the storage of the chemicals. It's about the handling. It's about the hazardous substances. It's about the dangerous goods management. It's about control of the major accident hazards, risk assessment for the processes, personal protective equipment guidelines. Just that you have some ideas. And you see here, the chemical manufacturing company as an overall thing is mentioned as an example. And we have here this special regulation COMA, COSH, and also the D's here, dangerous substances and explosive atmospheres, regulation, which are applicable, for example, for such a company. Just if you mention here, just let me say the control substance, the COSH, or in Malaysia DOSH, then it's already fine. It's not that critical. You have here also the summary, relevant guidance, chemical storage, substances, the regulations, risk assessment, protective guidelines, process safety management, workplace exposure, emergency response planning. For example, that's also applicable for all industries, that they really need to have an emergency planning. In case emergency is happening, what needs to be done, how to respond to this emergency. That's here very, very important and part here. You see here how to navigate. You can here when you go to the homepage, there is a guidance, and then you can even select different industries. And then you can even choose the topics accordingly. That's here just what is mentioned here, some reflections which you can do based on chapter 3. Just pretty short. But let us look now to the next thing. Case studies. Payment protection insurance. I guess. So far I mentioned in the slide itself as a mini case, but here under this document you have more details, because here some questions are addressed. There are 4 questions addressed. How suitable are payment protection insurance as a risk mitigation instrument for SMEs? What are the criteria to take out such an insurance if it is not mandatory? Which topics should be negotiated with the insurance? Is there any recommended procedure for the implementation or implementation payment protection insurance in a company? And then you have here suggested answers. Suitability for SMEs, of course, financial vulnerability. Usually SMEs, they have quite a limited resources, and if something happens, a downturn, unexpected events, some negative incidents, accidents, and so ever, then of course their reserves are very fast, they are exhausted very rapidly, and in order to have a coverage, then of course such a payment protection insurance might be a good approach. Also, business dependency. If the SME is dependent on major customer and the customer fails, and you have a coverage, in a payment insurance, then up to 80% of the damage might be covered by such a insurance. Usually there is a limit. They don't let me say, they don't cover 100%. Usually it's always up to 80% of the coverage, and you have also some some threshold, maybe up to a certain limit, you have to bear on your own, and only the damage which goes beyond that threshold is reimbursed. Yeah, that's how it usually works. Yeah. Debt exposure. Yeah, if you have significant debt obligations, then of course here such an insurance might be helped in case of failure. Yeah. What are the criterias? Yeah, the need. Yeah, that you have really a need, and you should also afford. You should also be able to afford it. Yeah, then you should always think about what is the coverage. Yeah, which specific risk shall be covered. Yeah. Is it in general, yeah, for example, kind of a combination with business interruption insurance, or is it just about the payment itself, yeah, when the customer fails to pay, yeah, or even if you fail to pay, yeah? So that has all to be clarified upfront. Yeah? Then you should always have a clear understanding about the policies, exclusions and limitations. Yeah, because there might be some exclusions or waiting periods. For example, you must already take out such an insurance for at least 6 months. After 6 months, you are covered. So if you have a damage before 6 months, yeah, the insurance doesn't pay. Yeah, that such things you must really be careful and negotiate, because that's a tailored insurance policy, and it is negotiable. I know in Malaysia sometimes they always say, "No, it's standardized. It's standardized." In Europe, it's really like this. You negotiate each point, and usually you do it like this: that you negotiate for a period up to 5-10 years, and then you just renew it. Yeah? On annual basis, you need not even to do anything, yeah? Because it is then maybe adjusted according to the inflation, yeah? When it comes to the premium itself. So it's not that every year you have to take out and take out and report the criteria for the insurance itself. If you think about the indemnity insurance, professional indemnity insurance, every year you have to report the same issue again. The same
file again.
Frankly spoken, this is absolutely nonsense what is here done by the insurer in Malaysia, because it's just creating administrative work for nonsense. Yeah, it doesn't have value added, because they have the data, and it's just if they want to increase the policy premium, then usually a paragraph is integrated that it say if the consumer price index is increasing by more than 5%, then we adjust the premium, and that's it. And the is running for 5 years. They have the data. That's it. So no need every year do the same procedure again. Yeah, but I don't know why this is this necessary by law? I don't know.
They do. I mean, for lawyers, yes. They do our PI insurance is always renewable per year. For our SSM certificate is, you can choose either you renew once every year, or 2 years once, or every 3 years then you renew once. Yeah, you can choose. Yeah.
Yeah, no, we are, if you want to, because often it's like this in Europe, you negotiate with the insurance company, and then you say, I will take the insurance for the next 5 years, and therefore you get then a special discount, often 30-40%. Yeah, because they have already a long term. Yeah. Yeah, because that's part of the negotiation. Yeah, and then it's really tailored, and you can go through the policy and say this and that I don't accept, this and that I want to have altered, because that's company. Yeah, that's let me say, for individual it's a bit more complicated. If you let me say place a high volume, then of course you can also negotiate. Yeah, different world, different approach. Yeah, you see here negotiating. You have to negotiate the coverage. You have to negotiate the premium and the costs. Claim process. Yeah, it shall also be clear how to claim. Yeah, and that shall also be quite easily. Yeah, that you have a platform. In the platform, maybe you upload the evidences. They check then the evidence, and if this is already clear, you will be compensated. Yeah. even for example, when you take a car insurance, yeah, and you have an accident, then of course you lodge a police report. You just upload the police report with some pictures, and the rest, the settlement is done by the insurance. Yeah, and then you can even choose. In Europe, it works like this: that the repair is even organized by the insurance company itself, and they just say, please bring the car to this car dealer or whatsoever, or repair shop, and then they do the work. And that's it. And then they tell you, okay, 3 days later, or a week later, you can take your car, and that's it. So it's very, very consumer oriented. So the customer is king. So they serve really the customer in a very, very, very good way. Yeah. I don't think so that this is
No.
available here. Yeah, here they leave you alone, and here you can even fight with the insurance that you get the full damage compensated.
My friend's insurance, because there was an accident, the insurers forgot to submit the police report. So before, for the claim, and so he was not able to use the car for more than 3 weeks.
Wow. Yeah, in Europe, if this happens, that the repair takes a longer time, then of course, dependent on the policy coverage, they give you a spare car, which you can use in the meantime.
They don't even give him a spare car.
Wow. Yeah, but that has, of course, that has all to be negotiated, because you must know how the insurance companies think. Yeah, they think to maximize their profit, and the profit is if they never have to compensate any claim. So they defend the claims, because then the whole premium is just profit for them. Yeah, just imagine, if you do all the administrative work already, because you fill in online, they don't have even some costs with this, and then you have to pay, and that's it. Anyway, procedures for implementation in a company. Of course, you have to do a risk assessment, so that you know how vulnerable you are, and what you need, and which benefits you expect by a PPI coverage. You have to do a research, and you have also to compare, and accordingly, which offers are available, because there is, of course, also competition among the insurance companies. You do a consultation, that you really understand what is the policy about. Maybe you have an insurance professional or broker who helps you decide. Then it's about the budget and affordability. Of course, the premiums, insurance premiums, they can be quite high. So therefore you have to decide. Then you have to review the policy, you have to document, to communicate, and you also review periodically. That's how you deal here with this payment protection insurance. Here it's just then visualized the main bullet points, because often with learning is that you read through one time, and then the learning itself you do based on some charts or illustration, because if you have a picture, then it's easier for you to carry out. Then we have here another part, case study 2, 3.2. That is here going into more detail about the Kyoto Protocol. That is an UN convention on climate change, and was initiated by the UN already in the early 1990s. And because it took place in Japan, in Kyoto, it was named the Kyoto Protocol, and shall set here guidelines, limits on emissions to be applied to countries. And here, what are the questions? Demonstrate the interdependency on environmental impacts to risk management. Yeah. Then, in terms of best practices of dealing with environmental risk, which approach of the risk framework would you propose? How can the board of directors make sure that environmental risks will be mapped and tracked in a company? Which procedures would you propose to deal with unquantifiable environmental risk? Yeah, because environmental risk are often not really quantifiable. Yeah. So first, yeah, when it comes to the interdependency, yeah, of the environmental impacts, yeah, you have here the demonstration. Yeah, that highlights how here the environmental factors can influence various risks in the organizational setup. Yeah? Mostly it impacts, of course, the organization's operation, the financial performance, the reputation, the long-term sustainabilities. Yeah? So what are the interdependency, regulatory compliance, reputational risk, physical risk, legal and liability risk, financial risk, supply chain risk? Yeah, just here to mention. And if you come up just with two or three risks, and then you relate it, for example, supplier facing environmental challenges or disruptions. Yeah. If there is an earthquake, if there is a tsunami, yeah, of course, then the production facility may stop, and then this company cannot deliver their goods. So therefore, the supply chain might be interrupted, and that causes a lot of troubles in the supply chain itself, even up to the final customer. Yeah. Yeah, just it's also a bit that you think logically. Yeah, what's about. Yeah. When you think about financial risk, yeah, increasing the focus on environmental sustainabilities, of course, comes at the cost. Yeah, I mentioned this. Yeah, that in mostly country, also in Malaysia, it's not mandatory to implement any or really sophisticated environmental protection devices. Yeah, water, wastewater treatment, air filtering systems, then solar devices, photovoltaic, and so on. That's not mandatory. Yeah? And of course, yeah, there is the financial risk. Yeah, if you do it on your own, yeah, that it really amortizes. Yeah, because you have to invest a particular or a substantial amount of money, and of course that shall pay off. Yeah, by time. Yeah, and that is here meant also by the financial risks. Yeah. Yeah, or another approach is financial risk. Yeah, if you have an interruption, yeah, because there is an earthquake, yeah, and then electricity doesn't work anymore. Yeah, so therefore your company has a standstill. Yeah, then of course you lose customers. Yeah, you lose business. Yeah. And here it's also about to think how you can mitigate this risk. What can you do? Yeah, for example, if there is a blackout of electricity, yeah, then of course if you have your own electric manufacturing device, yeah, also electricity producing device, yeah, which is for example mandatory for the hospitals. Yeah, in case there is no electricity, then they have devices, they produce their own electricity so that they can continue. Yeah? And that can also implement it for companies, yeah? For example. Such things you can think here about the interdependency. Yeah. Yeah, then best practices. Yeah, risk identification, risk evaluation, risk mitigation. That is here. What is the standard approach? Yeah, environmental risk. What can you do? Yeah, for example, when we did the setup of a new company in Europe, yeah, in Southern Europe, yeah, we also investigated the exposure, the risk to earthquakes. Yeah, so that we have here some information, some data about the environmental risk, about floods, for example. Then, of course, we integrated this in the location decision, so that at that location we are not exposed to high floods, for example. That's what you can do here in terms of best practices dealing with environmental risk.
Mm.
The risk monitoring and reporting, stakeholder engagement, compliance, and regulation. If you look at these points, these are following, let me say, ISO standards. Yeah, you should identify, you should evaluate, you should mitigate. Yeah, you should monitor, you should report, and you should involve the engagement, the stakeholders, and of course, you need to be compliant with. Yeah, that's here a bit, let me say, what is in general applicable for risk management, not just environmental risk, for risk management overall. Then mapping and tracking environmental risk by the board of directors. So when you set up your risk, your risk list or your risk register is the technical term. Then of course you have also to include here the environmental risk. For example, if you operate in high altitude in some mountain areas, and there are also strong winters. Then you have, for example, to take into consideration, are the location exposed to the risk of an avalanche? Okay, for Malaysia, it's not an issue. But if you operate in Switzerland, then it's a high issue. Things you can think about. Just that you have here really some ideas. So you should, of course, here appoint directors who have here really relevant environmental expertise. They shall organize then the risk reporting, this risk register and the risk matrix. And it shall also be part of the strategy itself. You should think about what are the metrics. For example, when it comes to floods, then there is, for example, the probability of a flood with, let me say, 2 meters. Is about 50%. The probability of having a flood with 10 meters is, let me say, 20%. The so-called 100-year flood. How high is the probability that this comes up? Every 15 years, every 20 years, or whatsoever. Then you have some data. Because especially when it comes to environmental risk, the data gathering is often quite tricky, because it cannot always be quantified. And then, of course, you should always think about what are the consequences if a flood happens, if a dry happens, if a contamination of water happens, of soil happens. And things like that, because that can be risk. For example, if you set up a new company, then you have also to screen the soils. Are there any already existing contamination in that soil? For example, we did also here that we drilled holes and took samples from the soils and inspected that and investigated whether there are contamination in terms of metals, in terms of other chemicals and so on. And if this is cleared, then of course this is a go for the location. If not, then this location is already out of question. That must be planned, of course, all ahead. Because usually, especially in Europe, it's the case during this environmental check, the environmental permit. They investigate this. And if they find then a contamination, then you are the one responsible to repair that. And just imagine if you have to repair that later on afterwards, then this comes at a huge cost. So therefore, you should check already upfront. Just to give you some examples. You do here also external verification. Sometimes you have here good data geographical data, which you can use. You can also use external auditors, independent experts. They are then verifying whether it's possible to build there. For example, you should also check the soil in terms of loading capacity. Yeah, for example, not at every place you can build a skyscraper. Yeah, if you look, for example, to New York City, then you will find out that most of the high-rise building, yeah, they are concentrated at a specific place in Manhattan, and beyond that, you won't find a skyscraper because the soil load, yeah, is not able to hold such buildings. The same in Dubai. Yeah, they have to reinforce the soil, otherwise they cannot build a skyscraper, a high-rise building on that sand. Yeah, such a risks can all be here part of environmental risks. Yeah. Yeah, stakeholder engagement, of course, then dealing with unquantifiable risks. Yeah. Yeah, you see, of course, it can be very challenging to address and to quantify the risk itself. What can you do? Yeah, you can do some scenario planning that you come up with. Yeah, you just think through what can happen. Yeah, and then you work with assumptions. Yeah, and whatever, let me say, third-party data you can get, you can integrate in such a scenario planning and adapt to your needs. Yeah, so that your case, yeah, is properly investigated in terms of environmental risk. Yeah, and then you can quantify in a way. And even if it is just, yeah, there is extremely high risk, yeah, that you give categories. Yeah, you need not to come up with a value at risk. Yeah, if this, let me say, the risk of a flood, yeah, expressed in value added risk as a value added risk amount is, let me say, 10 million ringgit. Yeah, that's not necessary. Yeah, you can just rate, yeah, according to a ranking. Yeah, that is also here already helpful to quantify environmental risk. Yeah, resilience and adaptation. Yeah, of course, you must build organizational resilience. Yeah, for example, just right now in Europe, in Central Europe, there are heavy snowfalls. Yeah, because of the snowfall, yeah, huge parts, yeah, huge areas are cut off electricity. Yeah, because the electricity lines are cut. Yeah? And therefore, of course, you have to prepare for that. Yeah, what are you doing if you have, let me say, some 2-3 days no electricity and nothing can be really done in a company? Yeah, because you are not self-sustaining. Yeah, and therefore you have to come up with a planning. Yeah, disaster planning, for example. Yeah. Then continuous learning. Yeah, what can you learn out of a situation? You engage with experts. Yeah, contingency planning. Yeah, what can you, which plans can you come up with, yeah, to deal with specific actions, and how probable is that this outcome, yeah, the severance and the outcome of an event is. Yeah, that you have here some ideas. Yeah, that's here some mini case studies. Yeah. Then I have also a comprehensive case study that I always ask you to do upfront, to have some ideas, yeah, to develop some ideas how to answer that at home, and then we can discuss. I don't know whether you find some time to go into that holistic case study. Give me a second. Holistic case study task. Yeah. So we have here a company, yeah, that is an Atlantic financial group. PLC, AFG, is a diversified financial service company headquartered in London with significant operations across Europe, founded 1985. What are the business operations? Retail banking, insurance division, investment banking division, offshore operations, manufacturing subsidiary. You see here in Europe and also in the UK, it is possible to operate several industries under one legal entities. In Europe, in continental Europe, you don't even need for every separate division a permission. In UK, you need, of course. You have here also some key financial data. How many assets? What are the deposits? What are the premiums written? What are the assets under management when it comes to investment banking division? How many total employees? Where the employees are, and then you need here. You have here scenarios. What comes up in their business life. The scenario one is cross-border regulatory complexity, because they are operating in various countries, so therefore they have to adapt. Then the scenario two is that, of course, according to law, they are asked here to improve also consumer protection. There are some issues. You see, the full costs were not clearly disclosed. Often they come up when they offer here the product. They don't disclose the full costs, inclusively fees. So the customer doesn't have a clear picture. That is against consumer protection. The consumer the consumer has the right that ultimately he knows the all-in costs, with all fees, with all hidden fees and so on. That must be evidenced. So policy exclusions made it extremely difficult to make successful claims. You see here, they often, when it comes to the insurance part, they come with a lot of policy inclusions, and such a contract has 30-40 pages, and is very complicated, and ultimately it is even confusing. And if you want to make a claim, then, oh, sorry, this paragraph, oh, sorry, that paragraph, and so on. And even with the slightest issue, for example, if you have a fire, fire according to insurance is a defined status. So, for example, if you don't have really an open flame, which is more than 10 minutes, then it is not fire. But you can have, let me say, a burning in the case, that it is all glimming.
They don't compensate. They disqualify your claim because the fire is like not big enough.
The fire is not big enough. Because it was not an open flame. It was just that there was a very high temperature. And the high temperature led, for example, to this glimming. So that it destroys some parts, but it was. Ultimately, if you have let me say, a high temperature. For example, we had the case. You had the stove. The stove, of course, has the pipe for the exhaust. And the pipe of the exhaust, of course, gets hot. And the surrounding was made of wood, but with a distance. But the tube, the exhaust tube, was so hot that suddenly, let me say, that the wood started to become black, but it didn't burn as an open flame. Then the insurance company just said, sorry, that's not a fire in our terminology. We have to reject. But you have definitely, let me say, a case.
Yeah, but it's definitely damaged, and then I can't use the
Damage.
stove
And
anymore.
you don't, and then let me say that the company just said next time, they put and blow oxygen into it that we have fire, and then you
Just fire quickly.
reimburse me. So I even make the damage bigger so that you reimburse me. That cannot be. That's
Mm,
senseless. Yeah? But they,
mm,
they 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 mentioned that in the negotiation. Yeah, and
mm,
that's really of you have to check the conditions up front. Yeah, if you don't do it up front, then you have an issue. Yeah, and of course the insurance companies, they try really to confuse the customer. Yeah?
mm,
Health and safety incident. Yeah, there were an incident at their subsidiary Chemtech. Yeah, and you see here 3 workers were hospitalized with serious respiratory problems. 9 workers required medical treatment. Temporary closure of the production facility for 3 weeks. Yeah, what has to be done? Yeah, what are the consequences? Yeah, why this happens and so on. Yeah, so this case is really here and analyzing. Yeah, you have later on here the questions. Yeah, scenario 4: environmental compliance. Yeah, improper storage of waste chemicals awaiting disposal. Yeah, that is happening here at the subsidiary with the chemicals. Yeah, inadequate emissions monitoring system. Yeah, some countries, they don't even insist that you have an emission monitoring system. Yeah, failure to report the November incidents. Yeah, evidence. These are things that happened at that company. Yeah, and then you get the questions. What should you do? What is needed in terms here of environmental risk management? Yeah, Jersey operations review. Yeah, the appropriateness of marketing materials being distributed, whether proper client suitability assessment are being conducted. Yeah, know your customer. Yeah, was not carried out. The adequacy of anti-money laundering controls. Yeah. Then you see the questions. Question 1, financial regulation and cross-border operations. Explain the relationship between EU directives and member states regulators, how to affect here the compliance. 5 marks. Discuss the role of the European ECB. 6 marks. Compare and contrast the regulatory responsibility. 5 marks. Yeah, FSC and the prudential regulatory authority. Yeah, explain the concept of passporting and discussing relevance of cross-border operations. 4. Yeah, and then you have to the situation 2, some 4 question. Question 3, yeah, another 4 questions. Question 4, yeah, always some 4 questions. Yeah. That's here, yeah, very comprehensive. All just dealing with this chapter. Yeah. So in case, of course, in exam, you don't get such an holistic example. Yeah. But this is really covering all the topics which you should be capable here based on the chapter 3. Yeah.
mm,
And of course, in a similar way, yeah, some of these questions can come up in a case study.
mm,
That's how I want to prepare you if we have here a case study mainly dealing here with this subject. Yeah.
mm.
So let us now look into suggested solutions. So give me a second. I guess, yeah, it's this one. Yeah. So up to here are the questions, and then you have the model answer guidance. Yeah, here bullet format. Yeah, and then you have also the detailed model answer. Yeah, so that you have text. And yeah, I guess finally, oh, that's very comprehensive. And finally, you have the visualization in terms of summarizing just the big bullet points in terms of a chart or charts. Yeah. Ultimately, the easiest way then to summarize and to learn or to pick up here the essence is, of course, by looking into the charts, yeah, because that is highlighting. But to understand the charts itself or the tables in the charts, of course you need to have the background. That's without background, it's a bit tricky. But just let us deal with some model answers when it comes to the bullet format, because the bullet format is already let me say a dense answer. For example, what are the relation between the EU directives and member states? What was that? Was this one? Explain the relationship between EU and across its European operations. And then you see here, EU regulations are documented and enforced through EU directives. Directives are drawn up by the member states representatives, with European community support or Commission support, debated by the European Parliament, agreed by the Council of Ministers. You see, I gave you a chart where you see how the EU is organized, and that's just in one line summarized. Directives drawn up by the member state representatives of the European Commission, support, debated by the Parliament, agreed by the Councils of Ministers of each country. Then it comes into force. Member states must implement directives into their own law, because EU is a supranational body, and of course that it comes into force, it must be implemented, embedded in the local membership law, in the national law, national law of France, national law of Germany, and so on. And of course, member states must implement into law. There might already be a slightly difference from the directive. That is possible, because mostly the law is, as we have learned, is principle-based. So principle-based is always due to some interpretation and judgment, and that can, of course, be applied by the member states. Minimum compliance is required. And of course, the states can exceed the requirements. On voluntary basis, if you provide more than that, it's even better. AFG must comply with the regulation in each jurisdiction where it operates. Therefore, in UK, in Ireland, in Germany, because there they have subsidiaries. So what is the ECB and systematically important financial institution? ECB, central bank, responsible for stability. Then implements and enforces risk management regulation for this sci-fi or systematically important institutions. That's the abbreviation. You see here, sci-fi institution whose failure may affect the financial system stability and trigger crisis. Institutions is a wide paragraph that can also be huge companies. If a company is, let me say, like in the chemical industry, BASF, in Germany, which has, I don't know, some 100,000 of employees worldwide, then this is such a systematically important institution. And therefore, they can also check them, what are they doing in terms of risk. So it's not just financial. Usually such huge companies, they are conglomerates, and usually they also have, let me say, some financial branches. For example, when you think about BMW is also, the car manufacturer is also operating their own bank. The same Volkswagen, VW, also operating their own bank. That's just normal for them. So they can be part of such a important, sci-fi. Just to give you here some ideas. Comparison of regulators. Who is regulating what? That we have the BRA, we have the FCA, we have the UK as a Twin Peaks model, because we have these two organizations. Passporting, what is passporting? Arrangement allowing organization to comply only with the home state regulations. So home state is where the majority of operations head office is located. That is especially applicable in the European Union, because the European Union, although the regulation can be different in each national country, they can decide that, for example, if you have the headquarters in Germany and you have subsidiaries in Spain, in France, wherever, in any other 26 member states, then you can decide, I just follow German law. And then this German law is automatically applicable for all others as well. That is called passporting. Home state, where the majority of operations head office is located. Reduces, what is the advantage of that approach? Reduces the regulatory burden of cross-border operations. Just that you have here this terminology also clarified.
Okay.
Then question 2, prudential versus conduct regulation. Prudential regulation is always about financial solvency plus market stability, capital buffers and liquidity. Conduct of business regulation is conduct of institutions, employees, and intermediaries. That's the conduct. That's the where we have here the BRA and the FCA. That can be here mentioned accordingly. Employer-employee obligations, prime responsibility. Sorry. That's already another question here. It's continuing here. Maybe I make it a bit bigger. Because question 2, then the next is the mis-selling, FCA and financial ombudsman. What are the roles? You see here, FCA investigated. You have here really very, in a dense way, really the most important things how you can answer here in a case study. And of course, you put then some filling words, and then your answer is perfect. Financial ombudsman. Ombudsman, what is that ruling? PPI lessons. And so on. Rationale for regulation. Information asymmetry. Customer often lacks full knowledge about the product, about the costs, about the terms, and therefore here the FCA shall, and the ombudsman also shall balance this information asymmetry. Public goods, financial stability benefits all. And the individual firms may not invest adequately without regulation. If you don't force them, they don't do. But they have the benefit. If they can just release their waste without treatment, then they save a lot of money. Their profits are even higher. But the damage and the cost has to be borne by the general public. And they suffer. They don't have any profit. They have just the cost. So question 3, what is the HSE role and power that you have here? RIDDOR, what are which incidents have to be reportable? Just a big bullet point. COSH, requirement and failures. That you have here. Employer-employee obligations. You see, prime responsibility on the employer, must protect the employees as far as reasonable, practical. Cover employees and non-employees. Also, visitors to the premises shall be covered. Employees, they must cooperate. And what happens here? ChemTech failed to ensure contractor followed protocols, failed to update risk assessment. Then question 4, environmental agency role, enforcement power, rationale for the environmental regulation. For example, ChemTech, local residents unaware of ground contamination until inspection, historical pollution affecting wider community. So often the residents, they don't even know that they are exposed to that risk, to the hazardous chemicals, to the ground contamination, because they don't check their drinking water every time. What are the limits? Nitrate, nitrat, and things like that. But that's definitely, if here the concentration is too high, it's definitely, even goes that far that it creates or is responsible for cancer. And that is really often very tricky to evidence who is the culprit. And here we need really tight governmental regulations, what is allowed and what's not allowed. Then we have the international agreements, Kyoto Protocol. National governments must implement international. If they don't ratification, if they don't do it, then it's not valid. The best UN resolutions are worthless if a country is not embedding this resolution in their law. Question 5, Crown dependency status. It's not part of the UK or EU. They have their own sector. These are the 3 ones. Detailed answer. You just read through one time. Of course, here you can use the read out loud function. Then you just do it like this. Let me have a look whether it works.
The European Union operates as a political and economic union of sovereign member states.
And that you can listen in the evening. That you can listen in the evening. At least that you heard one time, what is the detailed answer about? And with every time listening to it, of course, you grab and you keep the essential points. It would be too far if we go through all that. Therefore, I provide here with the text itself. That's very, very comprehensive, really. You see also definitions. What is information asymmetry? Situation where one party to a transaction has more or better information than the other party. That's the general definitions. And then you have here an example. So that whenever, for example, it can be a simple question also in exam, define information asymmetry and provide an example, 5 marks. And then you can refer here to. You see, then you come up in financial services is particularly pronounced. Often the institution, they possess detailed information about their products. And then even the customer, they lack on understanding. They often even don't understand these complex financial products. For example, if you want to place money, just an ordinary fixed deposits, then of course the bank offer you a plain vanilla fixed deposit. Then they say, give me 10,000 ringgit, then you get 2.5%, and that's it. But then they say, we have also a model where you can gain higher a higher return, but this higher return is already a mixed product where part of your money is invested in bonds and in shares, and only if the shares and the bonds they develop accordingly, then you get the higher interest. But that's already a very complex. Which bonds are these? What shares are part of the basket? And then it becomes, of course, very complicated. And if the bank is not giving you a detailed, clear picture, then from where should you know what this product is about? And that's the information asymmetry, for example. That's here some ideas. Then the health and safety. That's all together. So, and here you have the visualization. You have the overview of the company. Then you have which divisions they have. Then you have the employment distribution. You see UK is dominating. So therefore, in this case, you should follow UK law. Ireland, Germany, Chemtech. Chemtech is the subsidiary, and Jersey they have also some. And no, Germany, in Germany they have investment banking. Yeah, you see here in Frankfurt they have investment banking. Yeah. So 5 critical scenarios under review: cross-border complexity, consumer protection. Yeah. And you see here almost a high percentage of the rules of is against is not really fulfilled by the company itself. Yeah, so therefore, and also the HS health and safety. 12 workers exposed. Yeah, what there were an incident not properly reported. Yeah. Then there are some concerns also in the Protectorate of Jersey. You see here financial regulation, directives, member states regulation. First of all, you have the EU directive. It is debated and voted in the European Parliament. It is agreed by the Council of Ministers. That's the final agreement. Then it must be transposed to the membership to the member state law that you have here. Members must comply with at minimum EU directives, but can gold plate, exceed requirements, must comply with slightly different regulations in UK. That's the minimum. Conduct of business, consumer protection. Then you have the prudential regulation. What's the focus? Conduct of business regulation, what's the focus? You see, it's really giving you also in a visualized form information which you can definitely use to answer the relevant questions. That's how this learning document is working. And these points, that's for sure, at least, you should have in mind and be prepared in exam. At least that you have here the big bullet points. What you can address. Why regulation is necessary? Because of the asymmetry, because of the public goods regulation. Then we have here the health and safety. Chemical Chemtech. As an example. 12 workers exposed. We have here off work 5 to 21 days. What is the status according to the case study itself? And then you should follow this. What shall be the coverage? What shall be the coverage for the Chemtech? Of course, here asbestos, workplace stress, working at height, slips, trips, fails, chemicals. That's particular here for the company. Then nuclear, that's here just by industry, chemical. That you have here. Key legislation enforced. Here you just need COSH, RIDOR, and this is the Liability Act. The HASWA, that's here is another special regulation just regarding chemical. What are incidents to be reported? That's also in general. So specified serious injuries over 7 days incapacitation, 3 to 7 days incapacitation, non-workers injuries, dangerous occurrence. These are things you must learn. You must know what incidents are to be reported under RIDOR. And the same regulation you have also in Malaysia. Because Malaysia is following here with the DOSH this RIDOR system, more or less. Then what you need when it comes to the regulation itself: identify the substances, assess the risk, implement control measures, maintain tests and controls regularly. What is the situation with Chemtech's? Incomplete documentation, no risk assessment updated, inadequate control measures. So that you can mention, the company currently has an issue with COSH, because they don't have a complete documentation. Furthermore, the company has not updated its risk assessment, and therefore is not compliant. They have inadequate control measures. There is no mention. There is nowhere mentioned that they have a health and safety responsible person implemented in the company. Contractor are not properly briefed. There is no evidence that here external parties visiting the company are instructed accordingly. Because they are working together with a contractor. There is no mentioning what is what is with the contractor. Also, are there training protocols? Such things you can mention here. Gosh, that's this one. Obligation, that's under this special rule. Environmental regulation, improper waste, chemical storage, inadequate emission monitoring. They don't have any emission monitoring. Historical ground contamination, failure to report incidents. Just that you have it. What is enforcement? The environmental agency, what can they do? Warning letters and advice. They can address here minor issues. Then they give you a warning letter. They give you a deadline until to which you have to update and to repair and to be compliant with. And of course, they assist you in advice to achieve this compliance. They can, of course, also issue an enforcement notice, that it is, let me say, legally binding of corrective action. If you don't do this enforcement, so if you don't do this corrective action, then you lose the operation permit. So that's here already very serious, serious issues, and that must be done. That the company must apply this. Then prohibition notices. If you don't repair, or if you are not compliant with, then of course, because they say you are not allowed to pollute or to emit these emissions anymore. So you have immediately to stop with polluting activities, and criminal prosecution. That's finally also to consider that here the enforcement agency or the environmental agency can place fines and also imprisonment if you repeatedly default here. That's here. Some ideas. Unique status you can forget about. That's just that we have here the total picture. Regulatory approach, aspect regulatory level. Crown dependency is generally lower. You see here just a comparison between the Crown dependency and UK's in terms of the strength of the regulation itself. You see here in the Crown dependencies, they handle things a bit less stringent, easier to follow. Whereas in the UK, the regulation is more strict. That's here the comprehensive holistic case study with suggested answers. That you have here an idea. Of course, you would need to read through that you have the whole picture, and then. But some students, they like the case study, and the case study, the holistic case study, is covering the whole topic, and from a quite practical approach, and then they first dive into the case study, think about, and then they repeat, let me say, the slides, for example, because you have already the application to the theory based on the case study. Others, they want to have first the theoretical background, and then they dive into the case study. That's all up so far up to the students. Individual students, they approach here the topics differently. What is definitely also quite or very, very helpful, that's the question and answers, the 25 most most salient questions. These are additional questions, yeah, for the exam. Yeah, and it's here exactly, yeah, alongside the chapter in the book. Yeah, but you have here explain why implicit or intuitive risk management is considered insufficient for modern organization. In your answer, discuss at least 3 reasons why a formal risk management framework is necessary. Yeah, you know, small companies, they often implicitly think about risk. They don't have a risk management department or a governance structure, yeah, because it's not directly affordable. It doesn't pay off. So therefore, let me say that the owner or the manager, the CEO, is of course taking into consideration risk elements whenever a decision is made. Yeah? And here you have to explain. Yeah, that's just one question. Yeah, let us look into the answer. Oh, where do I have it? Yeah, here. Why? Yeah, why implicit intuitive risk management is not sufficient? Yeah, because let me say, easy decisions, there is not such an issue with risk. But nowadays, yeah, the complexity of decisions is very high. So therefore, a lot of organizations, they face hundreds of risk decisions daily. So therefore, they cannot just rely on instinct. I have a gut feeling. My stomach says I have this and that feeling. Often in small companies, the owner just say, oh, I know this. You need not to explain. I think this, that. But it is not evidenced by any facts. Yeah, but nowadays, because it is much more complex, the business world is very fast-paced, very complex. You need to have a proper risk management in place. You have also multiple decision makers, not just one. In a small company, only, let me say, one or few are making decisions. Nowadays, if you have a matrix organization in a multinational company, then many people are making here decisions. And of course, you must here have a consistency, especially in terms of risk. So you must provide them with procedures, with guidelines, how to evaluate risk so that it is institutionalized. Everybody is working with the same instruments when it comes to evaluating risk and implementing risk with decision making. Therefore, it is necessary to have. Lack of consistency. If you don't have a framework, then sometimes it's done in this way, the next time it's done in the other way. That's not good. So why do we have procedures? That we can standardize processes. And also decision making itself is a process. And therefore, with decision making, of course, it is essential also to evaluate the risk. Embedded with the decision itself. And that shall be institutionalized. So that you always do it in the same manner. Then you have a learning effect. Then you have a learning curve. In the first time, maybe you come up with a small risk register. Only, let me say, 3-4 lines. The next time you learn already from that. So that the risk management system itself in a company is ever growing, is expanding, it will be more detailed by time. That's here what you can mention. Strategic alignment. Of course, here risk management is very important that you have an alignment between the operation and the strategic objectives. Often it's like this. The operations do something different than what is the strategic approach so far about. So that you have here some ideas. And then of course you have the detailed narrative answer. And you have here the comparison that you have here. Dimension, what's the decision consistency, strategic alignment, shareholder needs, scalability, accountability. Implicit, and intuitive. Yeah? And what is the comparison to the formal framework? Yeah, implicit would be variable, person dependent. Yeah, whatever the person is doing, if they are well educated, maybe they do more. If they don't have any idea of risk, then they don't do anything. Yeah, strategic alignment usually weak. Yeah, in an intuitive approach. If it is a formal framework, then it's explicit and documented. Yeah, so you have here a comparison with let me say no, that's 2 5 15 word counts. What is describing here, what is given here, you really the essence of that question.
Okay.
I hope this is serving you. Yeah, this is helping you in such a way. Yeah, that because other tuition provider they don't provide these details. Yeah, they more or less give you the slides. They discuss a bit about and maybe they dive into previous exam questions and that's it. Yeah.
Yeah, I mean, I really appreciate it. Just that, I mean, I think I already said it before. Risk management is tougher for me. You know, less.
Yeah.
I can relate to it less than corporate governance. You know,
Yeah,
CGI I can relate a bit more. Yeah, risk management. Like when they talk about the REDOR and DOSH and OSHA, I'm like, what is that? I'm so not familiar with all that.
Yeah, but now you have already heard about this technology, or this abbreviation, this acronyms. Yeah, and then you just need 1-2 sentence. Yeah, 1-2 sentence to explain what is about, how it is, what is the main focus, what is the purpose. That's already fine. Yeah, and then when it comes to a case study, yeah, then you can also mention this. Yeah, if the case study has a point with health and safety, then you can mention this. Yeah, if it is a Malaysian company, then you come up with the DOSH, explain DOSH previous, and always try to relate to the situation where the company is in. Yeah, if they have a weak reporting, yeah, then they have here to update, to improve here the reporting scheme. Yeah, for example, and then you can mention, the most serious accidents have to report it. Incidents with hospitalization of more than 7 days have to be reported separately. Yeah, and of course they have always to be reported when it happens, where it happens, who was involved, what was the reason, and so on. Yeah, because then the inspectors of the health and safety agency, they look into that reporting, and when they do an audit, then they want to see the documents. They want also to see the location, and then they even recommend how you can improve, what you should do, and this has then to be followed. And there are minor deviation from the standard, and of course severe non-compliance. That's how it works here. Let us look into the second question. So here ISO 31218 standard distinguishes between 3 elements: principles, framework, and process. Then you see here, what are the 3 elements of ISO? The principles, fundamental guidelines; framework, organizational structure for embedding the risk management. It's about leadership, implementation, evaluation, improvement, and so on. Then it's also about the process itself. Which processes have to be carried out, step-by-step operational approach. That's highlight. That's the main summary. They don't say and which step you have to do to implement in this and that in that approach. That is not necessary to know. But at least you know how it works, what the standard is about. What are the elements? What are the relationship? What is the importance for the practitioner? That's what is this question addressing. Principles provide the foundation. They feed into the guide, the framework. Framework provides the structure. Processes executes within the framework. So it is a kind of hierarchy. Then what is the importance for avoids confusion between what, yeah, that's the principle, how to organize, that's the framework, and how to do it is the process. Yeah. You see later on when you see in the visualization, you see the three elements: principle, framework, process. Purpose, why. Guiding values, where, structure. How, activities. Yeah, and then value creation, integration, customization. Yeah, and you see here also which clause in the ISO is referring to that. But that you don't need to know. Yeah. But it's always you follow principles, framework, and process, why, where, and how. That's very, very summarized. But you get the essence. Yeah. Yeah, you have here then, of course, also the text so that you have some ideas. Yeah, some sentences you can even pick out from that. Often I also recommend the students that if they have, let me say, the 25 questions with the answer, yeah, and we have also the syllabus, yeah, where in 5 pages everything is summarized, yeah, with big bullet points. Then based on that, you make your own, I name it cheat sheet. Yeah. So if you want to summarize, then you summarize it in your own way, the most important aspects of each topic. Yeah, that's then just one final page. Yeah, in this final page, you try to describe in own words what's the main purpose or what's the main content of that chapter. Yeah, and that you can do based on the 25 questions. Yeah, and this summary syllabus. Yeah, summary syllabus is highlighting all the topics. Yeah. Needs to be known, and then you have here this fact sheet. I name it exam preparation fact sheet. Yeah, and then you have sector regulation, 3 main areas, blah blah blah, market based, blah blah blah, EU regulation, what the key principles, European Central Bank, other agencies. Yeah, that you have it here, financial service regulation as a third point. Yeah, then health and safety regulation. Yeah. And then, quick reference summary here, yeah, with the regulator. Yeah, and that's it. That's already, let me say, the big bullet points. Yeah. And together with the most most important questions, you are, I guess, then well prepared. Here we have another question, scenario-based. Yeah? A medium-sized manufacturing company currently relies on individual managers to handle risk within their departments without any centralized coordination. The CEO has asked you to justify the implementation of a formal risk management framework. Prepare a briefing note outlining the key benefits and potential challenges of implementation of such a framework. Yeah, here it's also very practical oriented. Yeah, this can be also a question standalone as well as part of a case study. Yeah, what are the key benefits? What are the potential challenges? Yeah, then you see key benefits: consistency, value protection. Yeah. Opportunity exploitation is a much better. Strategic alignment, improved decision making, resource optimization. Stakeholder confidence is increased. Yeah, when you have here, let me say, a formal risk management framework. What are the challenges? Of course, cost. Yeah, especially the initial investment is often quite high. Yeah, you need to train the people. You must familiarize your staff. Yeah, so that they are really that they can work with this framework. Yeah. It shall not be just a paper, another paper, and another document. It just it should be helpful for the staff. Yeah, that it really gives them an orientation how to do things. And of course, you need to train them, like we do here case studies. Yeah, in the company, of course, you should also then discuss such case studies. Yeah, which of course tailored to the situation of that particular company you are working with. Yeah.
Yeah.
Cultural change, resistance from managers, autonomous decision making. Here sometimes, if you implement such a framework, then you might have here this change management resistance. Everybody wants that something is changed, but nobody really wants to contribute to the change or to be affected by the change. That shall be here also addressed. Resource allocation, of course, time and money wise, you need here to dedicate additional resources, because usually when you implement such a formal risk management framework, it is not done overnight. It takes some time, and usually this work has to be done in addition to the ordinary schedule. And if you don't hire additional staff, additional personnel, then it can be quite challenging. So therefore, you have to allocate additional resources really to implement such a risk management framework. It's not just, you do it by the way. It is really a main, it can, it shall be then a main task. Bureaucracy risk. If you over administer this formal risk management framework, then maybe a lot of additional paperwork comes up. But that is not the intention. It shall be streamlined as much as possible, but optimized for the use also as much as possible. So therefore, you must find here a good compromise, in which detail you regulate here the framework, or how detailed the framework is, what it regulates, how it regulates, and so on, which forms have to be used, and so on. But you should really build it here. Most companies, they build it with an ID system, with a module. Like you have an accounting module, you have a risk management module, which helps you a lot. Whatever can be processed automatically is processed automatically. That is here the sense, so that the bureaucratic hurdle is kept to a minimum. Implementation complexity, coordination changes, of course, it's very complex because it shall serve your whole organization. And different departments have different tasks, different purposes, and here you should find a solution which fits all. And that might often be a challenge itself. That you have here also some ideas how to deal with this question. Then also here visualization, 3 columns, how to deal with it. Benefits, challenges, and what can you do? You see, consistent decision making. That might be a benefit. What is the challenge? Initial implementation cost. How can you mitigate this? A phased approach. Nobody says that you need to have after a month a total perfect risk management system. That takes time. Therefore, there is even a 6-step or level approach to risk management. It can be first just an elementary one. Then you have a more sophisticated one, and so on. There are I guess, six stages. Later on, we will also discuss these 6 stages in more detail. Then define the term risk management framework. What is this? And the 4 minimum mechanisms that any risk management framework must include, according to chapter. You see, risk management, a variety of policies, procedures, processes, and tools. What's the purpose? To provide a coherent structure supporting the management of risk. What's the goal? Ensure risk-taking supports strategic objectives. What are the 4 minimum mechanisms? Of course, risk identification. Identify the risk, assess the risk, monitor the risk, and control the risk. Then you have here also very short, straight to the point, an answer here for this question. Explain what is meant by value creation and protection as the core principle of ISO 31280. Provide examples. Yeah? Core principles. Yeah? Establish that the fundamental purpose of risk management is to create and protect value. Yeah? So you don't do risk management just for the sake of risk management. It shall contribute to your value creation. Yeah? It represents a shift from viewing risk management as purely defensive, yeah, to seeing as strategically enabling. So it's not just, you want to defend, you want to prepare what happens. It's forward-looking. Yeah, it's already integrating strategic approaches which you want to achieve, let me say, in 5 years, in 10 years, and so on. As long as your planning or strategic approach lasts. Yeah? Include financial returns, stakeholder satisfaction, reputation, sustainability, achievements of objectives, yeah, that you have here. What's the value protection? Prevent fraud, health and safety, business continuity, insurance programs, cyber security protection. Yeah? What are value creation examples? Strategic risk-taking, entering new market with calculated risk, innovation, accepting development risk, yeah, to create new products. Each development of a new product is risk. You should know what is the worst case if you develop a new product? Is it really accepted by the market? What is the potential? That you should already have an idea up front, that you decide in which direction you go. Yeah, which features you offer with a new product. Yeah, the worst case is that you develop a product and the market doesn't accept it, and that then it's all the development costs are sunk costs. That's the worst case. Yeah, and that, of course, you can prevent, yeah, because you have a risk management system in place which already upfront simulates what if. Yeah, simply spoken. Yeah. Better decision making, of course, stakeholder confidence. Yeah, that's governance. Yeah, if you have a good governance and risk management in place, then of course it's easy for you to attract here, new investments, new shareholders, new investors. Yeah. Yeah, meeting objectives, of course, with risk management, it's easier for you to achieve the key performance indicators, which are your objectives. Yeah, yeah, so we can go through all the questions. Yeah, you see here, section B is dealing mainly about the framework components. Yeah? Here, the four key elements of a risk management policy. Yeah, what is the policy regulating? Yeah, it shall regulate here aims and objectives, processes, governance arrangements, roles and responsibilities. Here I should make this, give me a second. Oops, I had it already. Yeah, instead of the numbers, yeah, there should be the points. Okay. Yeah, that's here question 6. What's question 7? Question 7, discuss role and purpose of risk management information systems in supporting organization risk management activities. What are the benefits and drawbacks of implementing such systems? Yeah, risk management information systems usually is let me say, an integrated risk management dashboards, yeah, where it's a kind of software. Yeah. And what is the role and purpose? Technological based system. It's an internal network. Yeah. And you can build it in-house, or you can purchase such solutions also from external specialists. Yeah, especially when it comes to the evaluation of risks. Yeah, there is, for example, industry Palisade 8.1 is such a risk management tool where you can easily manage your risk register, and you build a dashboard, a reporting tool. Yeah, so that you have here such an information system which really grabs the basic data whatever you report, whatever you set, and analyze it accordingly. You can also do here scenario analysis on automated with automated tools. For example, Monte Carlo simulation you can carry out. You can also set here graphical analysis, that you do an automatically regression analysis, that you say what is the risk, the risk function, the mathematically risk function of a particular risk. For example, currency exchange risk. And then you have a really probabilities what happens in your company, to which extent you are exposed to, and you can simulate. For example, if you don't hedge the risk, what happens if you hedge the risk with foreign exchange? Foreign exchange contracts, or with options or whatsoever, then that is helping you really to evaluate here and to get really a detailed picture, and that helps you, of course, to make decisions. That's here the central point. You have a central repository for the risk data, because it is in a database. It's not here at the desk you have some written notes, in another desk you have a file, and so on. It's all centralized, and then you can here grant the different department access, and you provide them with standard templates, how they report a risk, and what is their assumption, how much the risk would, what is the severance of risk, and so on. And then the risk department, of course, is here standardizing and doing analysis and providing here a risk report. Automated workflows, in terms of reporting and monitoring. That can only be done with an IT-based system, otherwise not possible. Benefits, improved coordination, efficiency gains, better reporting, quality data, audit trail. If you think about the accounting software, the same is with the risk software. Risk software also provides you with the possibility that an external auditor can check your system. So that you have here an audit trail, also a documentation of your decision and changes. Real-time visibility. You can also link your dashboards to, let me say, WhatsApp, that every day the main key risk indicators are sent to the management. Real time. Of course, that means that on the basis here, the data or the input must be serviced accordingly. Okay, that's question 7. And so on. Oops.
Okay.
You have also some I guess this was already, sorry, I made a mistake. This was chapter 4. Oh, sorry. Oh, doesn't matter. Next time we do the chapter 3. I got it. This is chapter 4. Where is chapter? Give me a second. But you see here, where is chapter 3, holistic case. Here, chapter 3. Chapter 3, I also uploaded to you. Sorry, you didn't stop me.
At some point, I thought that I wasn't able to absorb anymore, so I thought it was me.
Okay. Now you see here, chapter 3 is of course dedicated to what we discussed. You see here, question 1 is explain how EU directives on risk management are developed. Then you have to describe the concept of passporting arrangements. Yeah, the European Central Bank is one question. Then we have 5 EU agencies regulating risk, explain why financial services differ from other sectors. Yeah, and you have here FCA. Yeah, FCA, the role of FCA. You have Prudential Regulatory Authority, how it works. Yeah, you see, it's all here. All what we discussed so far is here mentioned, or here also addressed with a question. Yeah, you see, under RIDOR, organization must report incidents, list 4 categories of reportable incidents, and how the frequency is determined. Yeah, the frequency is determined based on the seriousness. Yeah. So if you are, if the company is exposed or is in a more dangerous industry, then of course inspections are more frequent than in, let me say, less critical less critical industries. I already have also some problems to find the right words already.
Yeah, I think we
almost now hours in one row. Yeah, that's. But I really try to use the time as efficient as possible, because it doesn't make sense that we do just 1 hour, then we make a break, then we make a break of another half an hour or whatsoever. Yeah, because then you really try to absorb just as much as possible. Yeah, and then anyway you have to go through through the questions. And whenever you have the idea, I can already find some answers, that's fine. Yeah, that's fine. If you can deal with the question, you're already on a good way. Yeah. And finally, I will also help you then, let me say, when we come to the end of the course itself, I will help you, because I'm working on that, that we have an overview, which questions are addressed in which exam, and then we can analyze and speculate a bit. This question, if it is just addressed last semester, it's not so probable that it comes up this semester once again. Yeah, you know what I mean. Yeah, that we can also look into. Yeah. Okay. I think because it's already a bit of challenge for you.
I cannot absorb anymore.
Yeah, because you had already for sure a tough working day. Then we will finish off today. This session. And whenever you have questions, when you dive through a document, or when there is something unclear in the answer, or you cannot properly get the point, just reach out, and then we can clarify things. Okay? Yeah. Okay. Yeah. So thank you so much for today's attendance, and please apologize that I mixed a bit. The can happen. Yeah, but you see here it works in the same manner. Yeah, you have also here what is the section. Then which questions are. Then I in this case I even put the marks, how much marks are allocated. Yeah, and then you have always the bullet points. You have the detailed narrative description, and you have always the table. Yeah, the table is ultimately summarizing here the essence, just in 10-15 word blocks, to get really the big points. Yeah. Yeah. Okay. Then take a good rest. Yeah. By the way. Yes. When would you like to schedule the next session?
The CG, or is it? I'm okay Sunday and Thursday, so it's up to William. If he wants to get back on Sunday, it's fine. It's fine with me. Yeah.
So we will. Last time we did on Sunday. We did the governance. Okay.
Yeah.
Correct. Yes. Then we can stick on upcoming Sunday. We do governance, and next Thursday we continue with risk chapter 4.
Yeah, that's okay with me. Yeah.
Okay. Then we stick just to the schedule which we used up now. Yeah. Up to now. Yeah, I will, as usual, I will send out then the documents. yeah, for the next chapter and so on. And the link here, yeah, for the session itself. Okay.
Okay.
Okay, Lydia, thank you so much.
Thank you.
Just relax now and yeah, have a good drink or whatsoever. Yeah.
I know.
And then you just sleep, and while you are sleeping, of course, your brain will digesting all the information.
I hope so.
Okay, great. Thank you.
Thank you so much. Have a good day.
Yeah, you too. Bye bye.